Hey, my friends, this is Gare, and we're going live. I haven't done a live like this, a live market analysis in a long time. So we're going to have some fun today. It's kind of off the cuff. We've got a few things that we're going to look at. But first, obviously, we're going to look at the Toronto Real Estate Board, what's going on with the number of sales. We're going to look at what's happening with the Canadian market. Of course, we just had the Bank of Canada increase rates again. And what does that mean? And some interesting information that I just learned from an economist about really about what happens when you have low unemployment numbers and what does that do to inflation versus the opposite. I didn't know that. It was really, really interesting. So I'm going to share with you what that is as well. And love, I just love doing these market analysis because it keeps me in the game, right? When I do it once a week, it keeps me understanding what's happening in the market, and it allows me to provide some insight, whether it's right here locally in Toronto or, as we get out across GTA and of course, right across Canada. So we're going live across a number of different platforms on YouTube, on Facebook, and I think also on LinkedIn. I think it's all working, but whatever. If you got questions, I'd love to see them in the chat as well. And like I said, we're going to be looking at what's going on currently this past week on Toronto Real Estate Board. We're going to look at some comparisons versus this time last year, and we're going to zoom out and look at the big picture, and we'll do some live stuff as well. I got Treb opened up here, so if we need some live stats, I can certainly pull those in. But thanks again. There's the dancing Gare over here somewhere. There's been a number of people, especially over the last couple of days with the Bank of Canada interest rate hike, reach out to me and just trying to figure out what that is. So we saw rates raise again, and I was speaking with an investor just the other day out in Calgary, and they were just saying, yeah, we've got our mortgage coming up for renewal in the next few months, and they weren't sure what to do. And I said, well, I can tell you what we did for some of our renewals that we had this month as well. And we actually chose just to take the renewal rate from our existing lender that we had, and we renewed at 1 year, a 1 year term, 1 year fixed. And we are basing that on, we'll probably do that again next year, basing on the fact that we're looking for rates to come back down again in 2 or 3 years from that. And we're okay. There's lots of cash flow there. So when there's lots of cash flow, you can make that decision. So that's what we did on those particular properties. And this particular investor thought that was good insight. So that's what we're doing. I thought I'd just share with you what we're doing on our investment properties when we have renewals come up. We're taking the shortest term possible at this moment, and others might do it differently, and that's okay too. Okay, so what do we got today? We're going to do the market report for Toronto, and then we'll zoom out a little bit and look at the big picture. And I got some other information here that we're going to be looking at as well. So again, if you're watching along with us, if you got some questions, throw them into the chat, or you're watching this on the replay, throw them into the comments as well. I'd be happy to circle back to them. So we're going to share my screen. Here we go. This is the McGowan report, and I will make this available so you can download it. And this is the high level view. So this is just of the Toronto market. And this is for the week of October 16th to October 22nd. And you can see the total of listings. The gray is this year versus red is last year. We know if you've been playing along with us, the listings are down compared to last year. Average price is down as well compared to last year. And if we scroll down, this is the big one. Total number of sales is down. Let me get my little marker here, and we can mark this up. Total number of sales is down. That's not the mark I was looking for. Where is it? Is this it? Maybe this is it. There we go. Yeah, there we have it. That's not it either. What do I need to do? We need to do this, and we need to do this. There we go. Total number of sales is down. That's what I'm trying to say. And the average price is down ever so slightly too. And we're going to see some information in just a few moments of what that means on a bigger scale. And of course, what that's doing to inflation and everything else. So let's scroll down a little bit. Total number of listings that we just saw, and this is on a weekly basis. And we can see the total number of new listings kind of hovering in there at 11. We'll call it 1,100 for the month of October. Every week, there's approximately 1,100 new listings coming up. And I should mention that we talked about it in a video I posted yesterday about the number of relists that's happening. So approximately one of every 5 homes is being relisted. So take that number there with a grain of salt, and you can see the number of days as they're being listed here. It's rare that you see properties listed on the weekends, but there was a couple there. Moving down, we got our average list price. So you can see that that number is hovering at around 1.3 right in here, 1.26. And that should come of no surprise, again, if you've been playing along with us. And we got our total inventory costs. I'm going to scroll right past this. Number of sales is what I want to get to. And we can see the number of sales is, even though when we just looked at it, 452, we thought that was low compared to last year, but that is up 55, 57 properties since the previous week. So that's actually a good thing, right? That's a good thing. Now, what happened the previous week? Why was that number so low? Well, it was a long weekend. We had Thanksgiving during that week as well. So you got to take those things into a grain of salt, right? When you look at the numbers, you see a number really low like that, or one that spikes up, start digging into it and start asking why. The best day to negotiate on the property, or I should say the day that had the 2 highest sales, were obviously Monday and Tuesday. Why is that? Well, if we remember just in a previous couple of slides, those are the days when things get listed, predominantly listed. So it typically takes, we're going to see days on market come up here in a little bit, but typically people go see homes Friday, Saturday, Sunday. They like them. They want to start negotiating. And that's probably why those days are higher. Good stuff. Average sales, average price. So this is the big one. So I always find this intriguing. What day is the best day in the week to negotiate on a property? Well, if you're a seller, you wanted Friday or Saturday. If you're a buyer, you wanted Wednesday for this past week. I always find that intriguing. I don't know about you, but I think that's always intriguing. And so there you have it. So we're sitting at 1,600,000 in Toronto. That's the median price, or the average price there, and that takes that average list to sell ratio. So you list a home for $1 million. What are you going to sell it for? Well, you're basically going to sell it for that same list price. So $995,000 is, and that's good. So we're seeing market valuations come in by the listing agents and choosing a good strategy by the listing agents, and buyers are following suit. So if you're a buyer out there, obviously you want to understand the market and look for opportunities, but know typically, not always, but typically, that the seller and the listing agent, they're doing their homework and they're following in the market. In that video yesterday, my good friend Mike and we talked about, we don't want to be listed to be on the market. We want to be in and listing ahead of the market, because when you list high, then you're chasing the market. And as sellers, we never want to be chasing the market. We want to be ahead of the market for sure. Good stuff. Good stuff. Average days on market. I said we get to this. So we're sitting at about 22, 23 days on market. And when we look at some stats in just a moment, it's actually a little bit more than that. This is just for this picture in time in Toronto right now. And so and I said we'd be seeing this move up from about, I think we were, when we first started doing these market reviews, we were sitting at 14 days on market. So we're going to increase that week over week. You're going to see those numbers increase. And as we are, and I think over the next several weeks into November, can't believe I'm saying that already, we're going to see that creep up into the high 20s, and most likely into the 30-day mark at the very least when we hit mid-December. Of course, that always happens, right? Total sales volume, well, that's just based on number of sales times the value of each home. We were sitting at just shy of 500 million. And that number is neither here nor there for you and I. It's really the individual numbers. That's what I like looking at. Okay, good stuff. Good stuff. Again, if you got questions, throw them in there. If you got comments of what we're looking at here today. But I thought I'd do something kind of interesting. If I can find what I'm looking for, as I got to show you. I got to show you this. What I'm looking at here, and what you're not is, here we go. There we have it. So this is dating back to 2013, and the red is the number of sales that we're seeing. And the green obviously is the number of listings, and there's spikes, there's peaks, there's valleys. We see that all the time in the Toronto real estate market, in any real estate market. And you can see here, it really dipped at the beginning of the year. So we can expect a real dip in sales and listings the beginning of the year. So that's coming up. We're coming up to that in 2023, right? We see that continuously throughout. So there's a natural flow or cycle to the market. So let's understand that. And where we're seeing the real peaks of listings is when there's some opportunity for sales. And I got to tell you right now, I was on a webinar with an economist earlier this week, and we've seen a lot of sellers pull their listings off the market. So if you kind of look at this right now, let me show you again. If we kind of focus in right on here at the end of the chart, the graph, averagely speaking, we're kind of down, right? In listings. So when we have that, when we have a number of sellers pull their homes off the market, inventory starts to dip down a little bit. And I think we're going to see inventory dip down over the next couple of months. Now, compared to the years past, it's definitely going to seem a little bit lower. The other thing that does is provides a greater inventory for next spring. So I think we're going to see a tremendous amount of inventory next spring because we have a lot of current sellers out there that are choosing to hold off a little bit, but they're going to put their market or their home back on the market in most likely in the springtime. We'll see that typical bump the second or third week in January. And what you need to understand this year for the Christmas holidays, holidays start very late. I think it's the 22nd or 23rd. And that's a really late. So that means the real estate cycle won't start up again to that third or fourth week into January based on that. So that's, just keep that in mind if you're watching for that. Good stuff. Okay, so the other thing I wanted to show you is where is it? Here we go. Nope, I'll get to it. I'll click on it. Here's what I'm looking for. The residential sales year over year, excuse me, year over year. And you can see our number of sales. This is September of last year based on this year. And you can see we went from 9,000 sales down to 5,000 sales in the month of September. Of course, we've talked about this in the past. There we go. Clear the throat. Nothing a good cup of coffee can't fix. You're seeing, so that's about 4,000 less sales than last year. And of course, that's what the market, that's what the headlines are going to tell you as well. Seasonally adjusted, we're down ever so slightly month over month. The average selling price, you can see we're down approximately, what is that? That's about 60, no, that's about $50,000 less, $45,000, no, $55,000 down on the average selling price. And the total new listings. So this is interesting. So we had 13,000, we'll call it 500 new listings last September, down to 11,200 listings this September. So we are obviously, we know that we're seeing that come down a little bit. And the days on market, see, this is what I was this is what I was saying. The days on market is really important. We're seeing this number jump tremendously. So we were at about 19 days on market last September. And for the entire month across all of Toronto Real Estate Board, we were just looking at Toronto previously. On the entire Toronto Real Estate Board, we are sitting now at 35 days. So that's going to feel like an awful long time to a lot of people, right? But really, it's not. In a balanced market. In a balanced market, we have 3 months worth of inventory, which say would take about 3 months to sell your home. So this is still, I don't want to say arguably, but stats would tell us this is still a seller's market or an imbalanced market. We need to get to about 3 months worth of inventory. But of course, we have other things at play here, like, for instance, the government interaction with the interest rates and other things like that. And I have some interesting news to share with interest rates and mortgages in a few moments. Listing days on market. Yeah, well, we just kind of talked about that. So let's just look at, I'm going to scroll down a little bit. We'll hover over a little bit of the commercial stats. So you can see the commercial stats are actually different than where they were last year. And the lease rates have gone up. If you look down in here, lease rates have gone up for the commercial side. And that's interesting, but I won't spend too much time on the commercial. It's the condo sales and then the rental rates I want to look at for condo sales. So condo sales are are down, yet the year over year selling price is up. So That's interesting, right? Because we keep hearing prices are down. Yet here's where most buyers, um, they set themselves up like this for success. You can always buy down in a market. In a market like we're in today, it's harder to buy up. So condos are typically, not always, but typically that entry level home buyer. That's where most buyers end up, is in condos. So of course that market should always have a great source of buyers for it, and that's what we're seeing. That price has gone up 4.5%. Versus the same quarter last year, which is interesting. Total listings, we can see that are down ever so slightly. So that obviously increases demand because there's less to purchase out there. And now let's look at the rental rates. So we'll scroll down to that for condos and the rental rate. So there's a number of rentals went from 16,000 down to 13,000. So again, demand, that's going to increase your rental rates. And you can see that rental rate for a one bedroom apartment went from $2,060 up to $2,481 in that Q3. So I thought that was interesting. Remember, demand. So the interesting thing here too, with when you have condo buyers or first-time home buyers or buyers that got pushed out of the market and now are looking at rentals, there's that tipping point on, because we keep talking about rental rates moving up. Rental rates can only move up before there's that tipping point or for that threshold where it becomes more sense makes better sense to purchase. So we'll keep pushing that envelope as far as we can until it makes sense to go buy instead of rent, right? That's the nature of the game. That's what's going to happen. Cool. Okay. What else do I want to show you here? There's one other thing. Oh, two things I'm going to show you. That's what I'm going to show you. We're going to look at the number of sales up to September, year to date to September. And this, I don't know if I can zoom in here. Let's try here. That's better. That's better. Here we go. So we know we had 5,000 sales on all the Toronto Real Estate Board for the month of September. And looking at the bottom, this is year to date, January to the end of September. That number, if you can't see it, is 62,631. So where does that put us? Where does that put us for the year to date? Well, last year, this number right here, that was the best number we've ever had on the Toronto Real Estate Board, with number of sales at 121,000, right in here. That would mean we need another 60 some odd thousand sales to catch up in 3 months. Do you think that's going to happen? Of course not. That's not going to happen. So I think we're going to end up the year at approximately, I don't know if we'll get to 80,000 sales. I honestly don't know that. And if I look back here along the chart, the last time we were in the 80s was 2012, 2000 actually, yeah, dating back to 2013, we had 87,000. I'm not sure if we're going to get there. Then the lowest number we've had, say, since 2008, because that was the last big kind of market shift or decline in the economy, that was 74,505. So I think we're going to eclipse that, but I wouldn't be. I don't know if it'll be much higher than that. I'm gonna estimate 75 to 80,000 sales, which will be our 2008 numbers, which is interesting. And if I scroll down and with that, last year we ended the year with an average sale price of 1,095,000, and I think we're going to end up. That's what this chart is, dating back to 1975. This is the average sale price, which is interesting. So here's 1990, right down in here where we had a blip in the economy again. 2008, which is right about here, right, and you can see that kind of just plateau right in there. And I think we're going to do the same thing. I think we're going to end up I still think we're going to end up at about at about 990,000. It'll be our average price on a very conservative side. I think we'll be a little bit higher than that for our average price. If I can draw that, there you go. You get the idea. But I think we're going to end up right around here, which if you kind of take out all those peaks, we'll end up kind of right on par. If you kind of take out the last 2 years, if you take 20, 21, 22 out, we'll continue to just move up nicely. But there's going to be we're going to feel it. We're going to have some hurt here along the way. Good stuff. What else was I going to show you? Let me just flip out of there. I was going to show something else as well, if I can find it here. Um, can't find it. Don't know what I did with it. Anyways, so all that said, here's some interesting news coming. This is a possibility. I won't say it's policy yet, but this is something that the Bank of Canada and CMHC and the policymakers are talking about with regards to mortgages and with regards to, of course, interest rates. We just had one this week. Will we get another one in December? That seems to be the talk, that we'll get one in December. So what does that do to people that are looking at renewing their mortgage? Because we got a lot of terms coming up, and what's that going to do? And if they got to go from a 3% mortgage to a 5% mortgage, that price per month, or that interest rate and that mortgage payment per month skyrockets. What's that going to do? Well, one way to alleviate that for the current homeowners, and what some of the industry gurus out there are saying, is perhaps there's a possibility to stay with your current lender and re-amortize back up to 25 years, or to the original amortization lengths, so your interest rate or your mortgage payment gets to be adjusted and reflect that. So that might be a possibility, and that would be an easy policy to put in place. It sounds like if they do it, it could be as early as January. So what does that mean? That means perhaps I took out a mortgage 7 or 8 years ago on a 25-year AM. I could have the possibility or the option to extend that mortgage back out to 25 years, readjust my payments. Now, of course, that means I'm paying interest for a longer amount of time, but for a monthly cash flow perspective, that could help a lot of people, and allow you to re-amortize back up to the original time without penalty, without any other fees. Of course, you're going to have the additional interest rate fees, but for some, that's going to be the best solution, as opposed to, I can't afford this house anymore, I'm selling it. They can afford that monthly payment, but they can't afford that quick jump. So that might be a possibility that people see. I don't know. I think that's a good idea. I think it's easy for the policymakers to put that in place. It's easy for lenders to administer that. And of course, if you're a bank, you probably would appreciate that, because that means you're making more money in the long run if you're the bank. So anyways, that's always interesting. Um, good stuff. Good stuff. So where are we going in the market? Well, I think we're going to see more days or more days listings sit on the market longer. We're certainly seeing sellers hang on to their listings longer, which means they're not bringing them to market, and that's interesting. An interesting tidbit that I learned about economic fundamentals, or the economy fundamentals, is, and this is interesting from an inflation standpoint. Check this out: the higher the unemployment rate, well, let me rephrase that. The lower the unemployment rate, the higher the inflation gets, because that means more people are working and more people are spending money. So what needs to happen? The unemployment rate needs to rise so the inflation rate can drop, which sounds so crazy, because you want your population to be working, but from an inflation standpoint, the way to bring that down, to control that a little bit, this is boggles my mind, is we need to have some unemployment happen so that inflation can come down, so there's less money being spent. It's crazy to think about it like that, but that's the economic fundamentals of inflation. And so that we might feel that a little bit moving into Q1, Q2 of next year, even though there, if you want a job, you can go get it right now. There's not been a time in the last number of 15, 20, 25 years where getting a job is so accessible in Canada, because people are looking to hire every which way and where. But if that does happen, know that they're trying to control inflation a little bit. So there you have it. Anyways, thanks again for watching. This was a little bit different format than typical. I shoot the video and post it. I thought I'd do the live and try something a little bit different. And I appreciate you watching. Again, reach out to me this way over there. There you go. Reach out to me. I'm always happy to engage. And like I've had people reach out to me right across the country, which is pretty cool, about different investment opportunities, and having me analyze their portfolio as well. And I'm happy to do that. And all the best to everybody. We'll see everybody on the next live stream. Bye for now.